back to Congress and really what remains of that stalemate on additional fiscal stimulus, including, of course, crucial aid to state and local governments. Wall Street also weighing in. JP Morgan CEO Jamie Dimon scolding lawmakers for their inability to reach a compromise. For more, let's bring in Stephanie Larosiliere, Invesco, head of municipal business strategies. Stephanie, curious about, with this lack of fiscal stimulus, how much more bearish you have been on state and local government investing at this time?
Hi, Taylor. Good to see you. So in terms of, of stimulus, we believe that, stimulus at this point is needed and justified. With everything that state and local governments have been through, we at this point believe that, there is a possibility that it may get done on a lame duck, but it will likely get done, after January 2nd and after President-elect Biden takes office. And we do think that, the number's probably going to be lower than what we originally anticipated. We think that the likelihood of a divided government will lead to Biden not necessarily having the impact that he would like to have when it comes to stimulus, but we do think we're going to see it. If we don't, well, it will be a net credit negative. In terms of, the credits within the states, we think that they'll actually do just fine. It's really the local governments that will have to pay very close attention to if we don't see another round of stimulus here.
You know this better than I do, but there is such a delay. I mean, you may not get sales tax hits for 3 or 4 months, and property taxes, as you know, could take maybe even a year or two to really show up on the financials. Have we not even seen yet the worst of what's to come?
So we do think that there'll be a wave of downgrades here. We don't think we're going to see defaults. So, when it comes to, what we've seen in terms of, the municipal market handling, the COVID crisis, there has been obviously the CARES Act. There has been the municipal liquidity facility, and it looks like Illinois will likely tap that again with, the fact that they couldn't pass that progressive tax there. But yes, like you said, there is a lag, but we do think the municipal market is in good shape. We do think that there is ample liquidity. And if, for names that are having trouble getting that liquidity, there is the municipal liquidity facility. So, there will be downgrades. We don't think there will be huge defaults.
Let's talk about some of those downgrades. You mentioned Illinois. We talk about New Jersey, the MTA coming out today and saying that they could lay off 10,000 people and cut subway service by 40%. Have spreads, though, widened out so much that that's an attractive entry point and you're compensated for that risk?
So we have participated in a number of the deals you just mentioned. So we pick our spots. So we have, strategies that focus more on high yield. And for those, yes, these are attractive entry points where we believe that these actually have some potential to pop sometimes in the secondary. So every position is not necessarily going to be held to maturity. So it's not always a long-term fundamental call on the particular names. Sometimes in a high yield type of strategy, yes, these are attractive entry points. And a lot of times you do see them pop in the secondary after the new issue market.
I am curious. We've had a huge wave of new deals come through. I mean, why not, right? Rates are at zero. Things are basically free to borrow more debt. But they all front-loaded that in front of the election. What now then if you get a dearth of supply?
So we do expect a dearth of supply. At this point, a lot of what's going to be done in 2020 has been done. The rest of this year is going to look very slim in terms of new issue. We think, going into January 2021, we'll likely start to see that pick up a bit. But really what that shapes up to be is a positive technical for the muni market. We're now at net issuance of net inflows into the market of just about $30 billion after having a tremendously, negative first quarter on the back of the COVID news. And so, from our perspective, we think it shapes up for a really nice technical picture. For those that haven't gotten invested in the market, it might be a good opportunity to do so now.
From technicals to fundamentals, your note made me laugh when you said taxes may not be going up as much as we thought, but they're not going down. Munis, as we know, do so well when you're trying to avoid some of those taxes. Do they then still have that relative value?
Yeah, so I think, what we've been paying attention to and what a lot of folks are paying attention to was the presidential election, right? And as we talked about, Biden's tax plan, it really was dependent on this blue wave, which we obviously did not get. So Biden's tax plan will likely not go into, into place here. But what we do know is that, again, taxes are not going down. The Tax Cuts and Jobs Act, that SALT cap deduction, that $10,000 limit, that's staying there. The 3.8% tax on the American Affordable Care Act, net investment income, that's still staying there. Municipal income is exempt from that. So when we think about the tax picture, the status quo is already high enough for demand for munis to be very stable, to actually growing. And when we think about stimulus and the fact that someone's got to pay the piper at some point in time, we do think that there are pockets where we will see taxes go up. It just will not be the large scale reform of the Tax Cuts and Jobs Act that President-elect Joe Biden was hoping for.